This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. Today's edition of Back Roads of Illinois. We were bringing you plastic farming sources and information sponsored by AgriGold. We're glad you're here on a Monday afternoon. I am Cesar Delgado. I am your host of today's program. I'm joining with Ted S. from zaner hedges. We're going to ask him about the fundamentals with the commodities markets, especially in the grains markets. Tomorrow I will be talking about the grains markets for today's market with Greg Johnson from TGM for today. Long time no see.
Yeah, I'm doing well, Caesar. Just been fighting a bit of a cold and been very, very busy here lately. But yeah, good to talk to you again, man.
Ted, how are the technical aspects on the commodities markets, especially in the grains markets, especially with the beans markets?
Yeah, it's a very timely question. You go back to the end of last week, it looked like we wanted to try to break out to the upside, even at the end of the day on Monday. But a pretty strong sell-off here on Tuesday, and we are breaking some downside support, even more so in corn. So it looks like we had been trying to break out of this bigger, broader downtrend in the soybeans, have an upside breakout. This is a pretty solid rejection of that after sort of failing to get that breakout for 3 or 4 sessions in a row. And if this pressure holds today, if we end up closing down here, I think it likely means we go back down to the lower end of the range. And a lot of this, technicals are usually driven by fundamentals. Obviously we've got a lot of things going on geopolitically. We have economic concerns both domestically and globally. But I'm also going to say that, look, we're off to a pretty good pace for planting, even though we have had some pretty strong rains. I mean, there are some areas that are behind, obviously. Southern Illinois, very much behind. But everywhere else is really getting after it. Beans are on a record pace. We are planting beans earlier than we ever have before. Some people are wondering if that ends up, if we end up slipping some more acreage in there for soybeans, possibly. So that's the fundamental spark to put us under the pressure, along with all of the concerns over global trade and relationships with China. um, and here we are. I mean, it's a pretty big down day happening at the moment, and if it stays that way, it's not going to look very good technically.
How is the fundamentals for today on the beans markets, Ted?
Yeah. Right. And so that's the thing. I mean, when we're 18% planted in soybeans already, that's a record. We've been pushing bean planting earlier and earlier, and we've seen good results with that. So that's why we keep getting encouraged to do that. Uh, in some cases, we're planting beans before corn at this point, um, when conditions are right, right, and that's sort of been the case here so far in a lot of areas this year. So, um, Caesar, I think the market as a whole, and I think I think you're gonna ask this question as well, but I think the market as a whole has been trying to look at the trade war with China as being sort of a repeat of what we saw the first time Trump was in office. Um, and the trade remembers that was resolved fairly quickly and fairly favorably for soybeans, at least for a period of time. China made a whole bunch of ceremonial or really feel good purchases, to try to make things go smoother or whatever. The last time around. And I think the trade really wants that sort of history to repeat, or at least has been kind of thinking that would be the case. I don't think this feels the same to me, though, Caesar. I think this might be long and drawn out, and it really could be a very bad thing for our soybean export program. Um, You also have another story here from Reuters today saying that China is going to look to cut its soybean meal rations in hog feed rations by at least 10% in the next 4.5 years, basically. That that's not good. They've been talking about that for a long period of time, but that is a very good way or easy way for China, or maybe not easy way, but that is an effective way for China to cut their global dependence on imports, their dependence on global imports, uh, by really 10%. I mean, that's what they use soybeans for, is to get meal to use for hogs, to feed hogs. So that's another negative soybean demand indicator. Uh, all that's really kind of starting to lean on us. And the sooner this doesn't get resolved, the sooner we don't have any progress towards a trade deal with China, which again, I kind of don't feel like we're going to. Uh, but if it doesn't happen soon, I think you're going to see more and more pressure here on grains as a whole, but soybeans in particular.
Of course, we will see for next couple weeks. What's impact on the beans markets for right now with the trade deficit for right now?
Yeah, so I mean, the talking points from this administration about why we're doing this is about trade deficit, and it's about manufacturing jobs, and it's about collecting tariffs to help offset income tax. Uh, and I think these are all really nice things that could be byproducts of what we're doing here, but I don't think that's ultimately what the real initiative or the what the real goal is. I don't think that we want to say, I don't think the Trump administration wants to say what the real goal is, because it might be an unpopular one, um, because of the ramifications of it. Um, but it also, you don't really want to telegraph what your mission is. I don't think, and that is to say, I think that this is a much bigger, broader thing. We are trying to sort of take the wind out of the sails of China's initiative to become the world's largest superpower by 2025, this year. They've been talking about that for 15 years, and they've made some very big strides towards that, mainly fueled by their income from being the largest manufacturing country in the world. 20% of the world's, I'm sorry, 60% of the world's manufacturing is happening in China. And there's a lot of global currency coming into them for that. And they're using it for defense. They're using it to really bolster their navy in particular, but their armed forces. And that's a concern. I mean, they don't seem to want to play nicely with most of the other world superpowers, us in particular. They seem combative. And I do think that any area, as far as just not getting the opportunity to get planted, I think we will get planted. It's just a question of when and what.
What is your position on the cattle markets with these prices for right now?
Yeah, we keep flying, right? I mean, it just keeps going. We've got feeders up another record high in the August here today. It's just it's crazy. Well, the thing is while we do have some concerns about the stock market and uh, economy, global economy, beef's not really a big export market. It's really domestic, and as long as people domestically are willing to spend money at the grocery store and pay up for higher priced beef, then there's good reason to say, well, we should be at these high levels or possibly higher. The problem again that I have is that I think the trade or the market is looking at this potential trade war with China, is something that can and possibly will get resolved quickly. And I don't really, again, I'm very, very skeptical on that. And if this goes on for a while, it's going to have a negative effect on the economy, global and domestic. It's going to have an effect on people's spending habits, and even more so, tariffs that we're paying for things coming in. You know, that affects how much spending money we have. And if we don't have that extra spending cash, we're going to be looking for ways to cut that. And paying for high price beef, I think is going to be one of the first things. So I'm really worried that we could see a very sharp turnaround in the cattle market. Um, if people do start to get afraid about their 401k and how much money they're spending, it just hasn't happened yet. And so for now, I mean, the chart looks great. We have a lot of upside potential. It just looks very strong. Um, but I'm worried that we're going to have a really sharp turn at some point. I don't know when that will be. I mean, if I go over and look at the stock market, it continues to act like it wants to break out to the upside. Again, I just feel like there's this false sense of security that we have right now. Trade wars are quick and easy to win. Um, if that's not the case, which again I'm very skeptical that it is, uh, this can turn around in a big way.
Do you have some concerns about the R word for the future, Ted?
About the what?
Mm-mm. Do you have some concerns about the R word for the future, Ted?
Well, Caesar, I've got a lot of concerns about the future. I think right now I'm more concerned about the future than I have been in a few years, right? I think the concern that I have is greater than the concern that we had, um, you know, going through the pandemic. But the market doesn't feel that way yet, right? And so I don't know. I think it's a very, very good time to be looking at risk management, and I'm talking about all aspects of operations and really all markets, right? I think you have to be very worried about what the downside potential is for the grains, soybeans in particular. I think you have to be very, very worried about the downside potential that we have in the cattle complex. Uh, I do think hogs could fare better than cattle, but there too. I mean, really everywhere. I think you have to be very mindful of the downside, but at the same time, I think you can express some bullish optimism for weather concerns for this growing season, for a potential trade deal if it does happen, and things to be all warm and fuzzy again. But I think that you got to use cash sales to manage your risk, and if you want to have upside potential, use calls to manage that opportunity for big rallies in the summertime. But at this point, I'm just really skeptical that this gets taken care of sooner than later. I really do think there's a bigger downturn coming really everywhere. So that's my concern at the moment.
Recession. I
Yes.
mean,
Yes, that's right. I mean that's really what we've been talking about this whole time. That is my big fear, and that is the big concern that I have that I don't think the markets really have. Markets don't feel like they have quite the same concern, especially in the last couple of weeks. The markets seem to be kind of brushing that aside, like it's well, we were worried about it, but we're not really worried about it anymore. Well, I think that fear is coming back unless we get something done here pretty soon. And I really don't feel like that's the case because, like I said earlier, I think the overall, I think the real battle that we're fighting here is not one that's being talked about in the news media, and I don't think it's something that gets resolved quickly.
do you have any final thoughts about the grains?
Uh, I think pay attention to what's happening today, right? We ran into some very key resistance for soybeans, and it looks like this is a pretty big failure, right? So I think this today might end up being a bit of a call to action, right? Um, I mean, I don't think this is a correction in an otherwise turn into a bull market. I think this is just a failure of a bear market bounce. That's my concern, anyways. So again, I think this is for the last couple of weeks, it's been good to just kind of wait and see what happens and kind of wait on any sort of marketing. But I think with what's happening today, unless there's a massive turnaround by the end of the day or tomorrow, I think it's suggesting that you should be looking at marketing opportunities again.
Thanks, Ted.
Always a pleasure, Caesar. Thanks for having me on, man.
This is Ted S. from Zaner Hedges on back roads of Illinois. Thanks to Ted S. from Zaner Hedges. This been back roads of Illinois. I am Cesar Delgado. You have a good day.